Hello, everyone, and welcome to your on-chain update for the 12th of April. How good's this? Bitcoin gets back above 30K. It's kind of hovering around there at the moment. We spent several weeks kind of consolidating there in that $28,000 range. What we talked about just before the Easter break was that there was very little leverage actually sitting in the system. And it was mostly actually kind of options volume and things like that, some speculative call options. Now that we've actually had the rally, what I want to do is just kind of break that down just a little bit further. Also look at a couple of price performance metrics that we recently rolled out, just to give you a bit of a snapshot on kind of where we sit. But to give you a very high level on my kind of gut feel, kind of removing myself from the data and the charts and everything. We've been talking about for some time that 25K was that deep value zone. Anything below that, in my view, is kind of that deep value. As we get up into this $30,000 realm, I don't necessarily think we are overvalued. I think we're probably close to what I would call the mean. We've gone through that kind of hyperextension during FTX, and I think we're now kind of hovering around what gut feel is probably fair value. Now, that doesn't mean that we're going to stay here at 30K. We could very well head higher. We could also very well head lower. But there's very little gravity, in my opinion, both up and down. So we're kind of in this nebulous in between phase where we've kind of got out all the deep value zone. And the higher that we go from here, the more probable I see that some people will start to take profits, traders start to get a bit more active. Things just run out of a little bit of juice. People have kind of seen the price rally, like, oh, I missed it at 21K and I missed it at 18. 30 is getting a bit expensive. They're the kind of people who will jump back in and push us up to 40. But then people at who is still kind of on the sidelines go, you know what, I'm going to sit back and wait. And other people go, you know what, I'm going to take a bit of coin off the table. So my gut feel is that we're going to start oscillating around. We're probably into a reaccumulation period. I'm not in the camp where I think we're going to be heading back towards that kind of 15K level and, head back into phase two of the bear. It's, something between 2016, 2019. That's kind of how it feels. I don't think we're going to all-time high, but I also don't think we're going to zero either. So we're kind of in the middle. There's not too much momentum in either direction, but that's kind of a gut feel. Now let's get stuck into some actual data. Okay, so the first thing I want to touch on is we recently rolled out this price performance dashboard, which is, some of the crowd favorites looking at Bitcoin price performance, all indexed to 100 since the last halving, since the cycle all-time high, and there's another one since the cycle low. Now, look, these are just kind of charts. They're a bit more fun than anything else, but they give you a bit of a roadmap, right? Where have we been in the past? How did Bitcoin perform? So a couple of takeaways. One, I think we would probably all agree, and having now looked at all the FTX and the Alameda and all that kind of GBTC nonsense that went on in 2021, in many ways, I feel like our rally was somewhat curtailed, but you can also see the height, the pace at which our green curve here really ripped above the 2017 rally. It wasn't quite as extreme as the previous 2013 and before, but they were also much, much smaller and less liquid events. And if we do believe in some kind of diminishing return profile, really we should have probably followed more 2017, or in fact more of a long kind of grinding higher type behavior. Here we kind of went too far too fast. We corrected more to the downside, and then you can see that we never quite, on that second all-time high rally, in some ways I almost feel like this rally should have been transplanted onto here in a more natural kind of market system. But anyway, that is not the market that we had. We have to trade the market that's in front of us. Now, interestingly, our bottom, right, this is on the halving basis, our bottom all tends to be in the same zone. So in terms of the length of duration since the halving, things are kind of looking pretty similar. You can see here we're in the middle of our 2019 rally. Here we're at 2016. We're starting to get some momentum to the upside. It wouldn't surprise me if we kind of start oscillating in around this 40 to 25 zone. That wouldn't really surprise me. And the halving is just a little bit over 1 year away. So getting towards that. In terms of performance since the all-time high, you can see that we're kind of in the mix, right? There's not too much difference between where our previous cycles. This one here is the very first cycle. We can probably ignore that. But this here, we're kind of in amongst the meat of it, right? This cycle is not overly different since the all-time high. Just note that my all-time high is actually the April 2021 peak. I think this thing here, even though this was an all-time high, I believe it was a scam pump. And most of what we saw there, it was already in bear market territory across every metric, which we've covered in some detail. So we're kind of in amongst typical behavior here as well. Again, towards the end of 2015 into 2016 and kind of halfway through the 2019 cycle. So all these things kind of make sense and feel about right. Now, in terms of performance since the cycle low, here we are on a little purple curve, right? We're kind of, again, in amongst the meat of it all, but again, it's very, very early days. And, obviously this assumes that the cycle low was indeed FTX imploding. But you can see our previous cycle, right? Here's 2019, very, very similar all up until that kind of GBTC sell-off when the bear market started. So again, this feels like a little bit of an anomaly, and I do hope that we move towards a more spot-driven market that takes us forward. That is certainly my gut feel at the moment. We're in a more spot-driven regime, less about leverage, but we'll touch on that in a sec. Now, this is a chart that I quite like. This is looking at our quarterly in orange, monthly in blue, and weekly price performance. So in terms of a percent, how much has Bitcoin gone up over 3 months, 1 month, 1 week? And you can see here, this is a fairly full-bodied zone, right? 2023 has been a fairly robust recovery. The highest quarterly returns we've had since the all-time high. Now, note this was kind of a one-and-done type moment. This has got a bit more of a sustained trend to it, a bit more like 2019, a bit more like 2017. So this is actually good, right? It's healthy. This shows this is actually a more sustained rally, even than the all-time high that we had back here in October, November. So this is good to see, and a couple of months of strong price performance. I mean, 80% off the lows. You can't be too mad about that. These ones here are looking at monthly performance just on like a bar chart. You'll often see in traditional finance, like, oh, is this a plus or minus 1 sigma move? You can see that these monthly bars certainly stand out, right? You can see the bull markets are these nice big clusters, but these are strong monthly candles, right? Now, generally speaking, you kind of get these come in clusters. So I wouldn't be surprised if we do get a little bit more momentum, but at the same time, I do believe we're probably a little bit capped on the upside. This is our weekly price performance, and this one does have our plus or minus 1 standard deviation band. Now, generally speaking, when you blow outside a standard deviation band, you can probably expect some kind of a correction. Or for Bitcoin, you may see here, when we come out of a correction, it's typically quite powerful. And that's when you get these 1 sigma moves. So obviously all-time high is powerful moves into a correction. This one here is actually coming out of a correction. And this one, this particular green candle, is the latter, where we're coming out of that correction we had down to 19.8, and we went up to 28. So a very, very strong and powerful rally, plus 1 sigma move, and also one that started this rally. So at the moment, we're not talking about these kind of bull market multiple days outside of the band. We're kind of getting those first reactions, a little bit more early bull market, less so kind of full bull at this point, kind of expected result. And there you can see, there's our cluster of daily candles, quite some significant performance. So moving across to derivatives and just looking at kind of the leverage, a bit of a snapshot on what we looked at before the Easter break. This here is looking at our futures open interest in orange, options in blue. Now, futures has almost always been double that of options. You can see this pink line here is the ratio between options and futures. Here's our 0.5 level. So options have always been about 50% of the total OI until our recent rally. So you can see that options are now actually higher in terms of overall open interest. If we look at it in BTC denomination, futures open interest is actually declining on futures markets. We are seeing less leverage, less utilization of futures. Now, I'm actually not mad at this uptick in options, because options are a different beast. Particularly if you're buying call or put options, market makers are typically the ones that are doing the selling. So they're kind of taking on the risk of selling those insurance contracts. But if you're a buyer and you're speculating, you have a known risk, right? The probability that you're going to puke out a position that you have a known risk on is much, much less. They're kind of a better instrument for these people to be hedging on, speculating with, and not creating these like enormous leverage, liquidation, deleveraging events. So I'm actually not mad to see that options are picking up a bit of volume. And that to me is it's an interesting structure of the market. Certainly it's new. But anyway, let's jump across to another chart here, just to really inspect what's going on within the option space. So let me just run this out to the end of the month, end of April. What you'll notice here, the high level, we've got a pretty uniform body of put options in pink and call options in green. You can see they're quite clustered around. Here's 25,000, here's 30,000, 21. there's a lot of people kind of hedged in and around our current market structure. There's a few people speculating above 32,000, but for the most part, people are quite hedged in the short term, right? Out to the end of the month. You'll see a similar effect out to May. Out to May, we have heaps more speculation. These are call options out 35, 40, 45,000. If we go out to the year's end, you can see the same 40,000, 50,000, 60,000. So there's a couple of takeaways here. One, clearly a lot of that open interest is being driven by people betting long, right? They're going call options, they're betting out of the money, they're buying a defined amount of risk to speculate. Essentially, that to me is a more positive form of leverage. We are not inside any kind of gamma squeeze type territory. So therefore, if I kind of round all this out, this to me is a much healthier kind of leverage and speculation than people going super giga long on perpetual swaps and just getting blown out, right? Which was kind of the theme of 2021. This to me is a much healthier leverage. I'm glad to see it. And I think it delevers the market and kind of gives me a bit of a feel that this is mostly a spot driven rally. On a similar note here, we're looking at, in terms of funding rates and things, you can see here, this is a paltry 2.3%, right? You can literally get more in some bank accounts. So really the probability that someone's going to go and go all in, this is 100% return to go short Bitcoin as a market maker. This is 2%. You may as well put your money into a T-bill. So really, this to me does not scream giga leverage when it comes to people speculating. To me, it really does feel like a spot-driven market. And even on the liquidations, this was 64 million way up in short squeeze. It's kind of similar to our rally back here. People who got blown out at the top of the range, right? 24,000 to 28. This here was much, much larger as we started our initial rally. But let's put this on the full screen. If it loads, I mean, who cares? This is full bull market, right? People getting blown out north, long, short, up, down, everything. These big $1 billion liquidations that we see on these massive candles, hundreds of million on these big sell-offs. This is barely registering. It's starting to pick up though, right? Just visually, this is starting to get a little bit more volume, right? Certainly than this quiet, volatile, boring period post FTX, but it's still insignificant. So to me, yes, short squeezes are a part of it, but it's not the driving primary factor in my read. So in terms of the spot market, this is our URPD looking at the overall supply clusters. The thing to note, I mentioned we're kind of in that nebulous middle ground. Here's all the bottom buyers, right? Between 15,000 and 24. This is that FTX and 3 Arrows Capital range. Here we are up at 28,000. A lot of coins were transferred up here. These are new buyers. These are people who were here and selling. These are top buyers getting out. This is kind of the first consolidation range that we've seen, and there's been quite a bit of volume that's changed hands. There's not much above us. In my view, above 30,000, we're essentially in price discovery. It's certainly in terms of the way the market's going to behave. So my gut feel, this is a nice big support. I wouldn't want to lose it. If we did, I'm not too mad because we've got 24,000. I don't think we're going to get at the bottom of this. So therefore, this is kind of defining a bit of our range, right? Really, up to 24, 25,000, I think is a fairly stable support. Huge amount of coin volume. I think people will see deep value there once again. Above here, very, very nebulous, kind of a bit of a question mark as to what kind of momentum we're going to get. There's not really any gravity pulling us higher. It's all kind of in between. So I wouldn't be surprised if we revisit 28,000 in a week, 1 month, 3 months, 6 months. All of these seem feasible. I also wouldn't be surprised if we make an excursion up to 40,000 before returning back towards that level. So that's my kind of gut feel, and it kind of describes what I was talking about at the start of the episode. So just conscious of time, just a very quick snapshot on the kind of the on-chain activity side of things, giving you do we have momentum? We have positive momentum on new addresses, right? That's obviously not factoring in payload, but new usage, thumbs up. We have not quite positive momentum, but an upswing in transaction volume, thumbs up. Transaction counts, we also have a positive momentum, thumbs up. So on-chain activity actually looks pretty good. Transfer volume to and from exchanges, uptick, again, thumbs up. It all looks pretty good. So there are more people using the network, good to see. Profitability, lots of chop. Chop is good. Chop is good because it speaks to a disbelief rally. People believe we were going back to zero down here at 19.8. We went to 28. People believe we were going to zero just before we broke out and they were selling the dip, right? They're actually selling out of the loss. Alas, we went to 30K. So there's a lot of people who hate this rally. There's a lot of people who do not believe it, but it is kind of the thing that's in effect, right? So again, I think we're outside that deep value zone, but there's a lot of people who just simply do not believe that the upside is real, and that's good to see, to be honest, and speaks to the spot around. Last topic, when we look at cohorts, this is shrimp, crabs, and up to fish, so people with less than 100 BTC, pretty much all-time high, what we call yearly absorption rates. Take all the coins that were mined, 900 coins per day, 365 days, all the coins mined in a year. Now let's use that as like our base level, right? How many of that volume have the shrimp acquired, have the crabs acquired? Basically, these guys are over 110%. I think shrimp are like 117, crabs are like 108, and fish are like 70. Sharks, I think, is something like they're 100 to 1,000. They're something like 70%. Basically, everyone's a buyer except for whales, who are distributing about 70% of the mine supply, and exchanges, which is like 180% or something. So basically, miners, whales, exchanges selling, everybody else is adding to their balance. And this is basically giving us a positive reading on our accumulation trend score. So, when I kind of put all this together, to me, it's a very healthy, Bitcoin led, narrative bolstered, spot driven, delevered rally. It's beautiful. It's great. It's exactly what you want to see. Now, do I have conviction above 30,000? No. This is where we start to get into that realm where we're going to start moving into a trader's game. I think the hodler zone is that sub 28, maybe even you could argue sub 30, but that zone is hodler territory. 25 is deep value. This kind of nebulous zone in between is going to get into the trader's game. I suspect we'll start seeing people take profits. Coins will come back into circulation. We'll spend, in my gut feel, we'll spend several months floating around somewhere, I don't know, 40, 45, and probably 25. That's kind of the reaccumulation range that I gut feel see. But again, we just kind of have to read the tape as it comes in. Anyway, hopefully that's useful, and I will catch you in the next one. Cheers.